Most traders think losing money only happens with bad trade choices. But here's the truth: many traders lose even when they make the right calls. Profits quietly vanish due to costs hiding in plain sight: transaction fees, slippage, spreads, and even your valuable time. In this video, we'll uncover the hidden costs of trading, the silent killers that sap your profits, and show you how to protect yourself effectively. Let's start with the most obvious culprit: transaction fees. Every trade you execute comes with a cost. Broker commissions, exchange fees, and tiny regulatory charges add up faster than you might expect. Imagine paying just $1 per trade. After 100 trades, that's $100 lost, even before you consider whether you've made a profit. Now, let's talk about slippage, the insidious one. It occurs when your order fills at a worse price than you expected. In busy markets or with large orders, this often means losing money each time you enter a trade. Over time, slippage is like a slow leak draining your account. You might not notice it on a trade-by-trade basis, but when you review the overall impact, it can be significant. Therefore, understand your broker's fee structure completely, and always incorporate slippage into your risk management plans. Now, let's explore costs beyond the obvious. To trade effectively, you need access to data, real-time quotes, advanced charting software, and analytical tools. These aren't free. The cost of premium market data and software licenses can surprise you. Next, consider the spread, the gap between the bid and ask price. This represents an immediate cost. Each time you open a trade, you automatically start in the red until the price shifts in your favor. In heavily traded assets like euro to US dollar, spreads appear minimal. However, in exotic pairs, altcoins, or thinly traded futures, spreads can be substantial, quietly eating into potential profits. And be cautious of free trading apps. If you're not paying in cash, you might be paying through order flow, your trades sold to market makers, or wider spreads that go unnoticed. Remember, nothing is truly free in the markets. Trading costs you more than just money, it also costs time and mental energy. Each hour spent researching, analyzing charts, and monitoring price movements represents an opportunity cost. Think about what else you could be accomplishing with that time. Then, we have the mental tax: stress, anxiety, and decision fatigue. Staring at screens for hours, reacting to every tick, and following every spike takes its toll. Over time, burnout can occur, leading to emotional errors such as revenge trading or ignoring stop losses. To combat this, schedule regular breaks, automate processes where feasible, and treat your cognitive energy as a precious resource, because it truly is. So how can you minimize these costs? First, consider choosing commission-free brokers. But be careful, read the fine print. Some make money through wider spreads or payment for order flow. Utilize limit orders instead of market orders to manage your entry point and avoid slippage, especially in less liquid trading environments. Finally, if you catch yourself overtrading, recognize that every trade incurs a cost. Reducing trade frequency and focusing on high-quality setups aids in conserving both fees and mental well-being. Sometimes, no trade is the best decision. Ultimately, the best defense against unseen costs is knowledge and discipline. Invest in your education. Understand how markets function, how brokers operate, and where expenses lurk. Utilize cost analysis tools and maintain trade journals to identify where your profits are going. You might be surprised by your findings. Above all else, uphold discipline. Adhere to your trading plan. Resist the temptation to chase every tick. Avoid making impulsive trades driven by emotions or boredom. In trading, discipline isn't just about rule following, it's also how you shield your capital from bad decisions. Hidden costs abound: fees, slippage, time, even energy. But knowledge is your power. The more aware you are of where your profits might leak, the quicker you can address these gaps and achieve consistent gains. If you found this information beneficial, please subscribe for more insights into trading psychology, discipline, and strategies. Trade smart. Protect your capital. And remember, always keep learning.